So hi guys, welcome back to our YouTube channel. Welcome back to another video. In this video we are going to talk about the coronavirus, the ongoing epidemic which is going on in China and is now recently spreading to other countries. So recently we have gotten questions from some of our clients and also some of the people in our groups on what that means to the markets. So our job as traders is to do research, understand what the impact of some of these things will be on the economy and reflect that on the market. And because markets are always ahead of realities, we can be able to take bets expecting certain things to happen in the economy, and the markets will always tell us if we are right or wrong. So today I'll talk about coronavirus. In this video I won't go into any other thing. So we'll start with coronavirus, how it started, then look at the countries which are affected, the industries which are affected, the effect on the stock market, and finally we'll sum up by what we think will happen based on what is happening. So to start off, we look at the origin of the coronavirus. So coronavirus started in Wuhan according to our research, and the signs started showing in December of 2019 in Wuhan. And so there were signs of some flu which was infecting people. Some doctors actually warned of the flu, and one of the doctors who actually warned passed about a week or two ago. And that's very sad when he actually outlined that we could be having an epidemic so early. So the media started paying attention to coronavirus. When I talk about the media, I talk about media houses and social media. The media started paying attention in January. So in January was when we started to talk about coronavirus. And from that time, when the deaths have been increasing, the number of people being infected have also been increasing. We have seen an increase in the number of people paying attention to what is happening, not only in China, but now spreading to other countries. So currently, the coronavirus has affected over 76,000 people where it originated in China, and we have over 2,500 deaths. That is, my data is according to what was happening yesterday. I don't have data for today. I've not yet checked what is happening today. So according to what was happening on Monday, 24th of February, over 2,500 people had died from it, and over 76,000 cases, to be precise, had been reported only in China. So the next thing that I'll cover is the countries it's now spreading to other countries, and that's the biggest risk for markets and for the global economy, because if it spreads to countries which don't have good healthcare, like China, because China is a country with good healthcare, with people who are well equipped, with doctors who have good skills, and if it spreads to other countries, for example in Africa, we could be in for a rude shock for what will happen from this pandemic. So the coronavirus started in China, and since it started in China, some of the countries that were first affected will obviously originate in Asia. And in Asia, we can look at Singapore as one of the countries that has been affected. We can look at Hong Kong, another country which has been affected. We can look at Philippines, which is also another country that has been affected by the coronavirus. Japan, also in Asia, has been struggling with the same. And some of these countries have minimal cases, but the biggest risk that we have is some of these cases doubling, like it has happened in China. And some of the countries we are talking about don't have a good health infrastructure like China. Outside Asia now, we can go into Europe, and in Italy there are over 700 cases which have been reported and 3 deaths. As of yesterday, we had 3 people dying from corona and over 700 cases being reported. So when it starts moving away from not only one country, but outside the country's continent into another continent, that's a big risk, because that's how viruses are spread. And when it moves to other continents again, especially if it comes to Africa, we could have a very big impact, because in Africa we don't have a good healthcare like other countries, like the developed nations. In Africa, we are third world, and so most of the countries in Africa don't have a good health infrastructure to cater for coronavirus and the risks that are contained in the virus. So for us, we don't pay special attention to the science behind corona or the vaccines or everything. So if we are traders, we try and look at what will happen to the economy and look at how that will be reported in the stock market, or rather how that will be reflected in the stock market. So to us, from our experience, the stock market is always ahead of economic reality. So what happens in the market is a reflection of what will happen in the economy. Sometimes markets are right, sometimes markets are wrong. Our job as traders is to know when they are right and when they are wrong. They are right and wrong depending on the investors' psychology, and depending on how people weigh things that are happening. So based on that, we are going to focus on what is happening in the economy and what will happen in the stock market, or rather what is already happening in the stock market. Then we'll try and extrapolate that to look at what is likely to happen from the epidemic, which is now spreading into being a pandemic. Some of the industries that have been hugely affected by the coronavirus include travel and airlines. So due to travel bans, you can't go to China. People in China can't go to the United States. In Kenya, you can't go to China. From other countries, you can't also travel to China. In Ireland, you can't travel to Italy now due to these travel restrictions. So people are now skeptical about traveling, and that has a big effect on the economy. So for example, in China, China is a manufacturing country, and most things are manufactured in China. When they're manufactured in China, people have to travel there to probably outline what they want manufactured and to pick some of their goods and ship them. So when travel has now been restricted, it's very hard for their manufacturing to do well. So another industry that has been affected is the manufacturing industry in China and other parts of the world. So many people are moving there, many companies have moved their manufacturing from China into countries like Vietnam. Part of the reason for this is not only the coronavirus, but also the ongoing trade war between China and the US. So we need to also remember that China and US are also fighting because of the trade war. So US accuses China of bad trade practices, and China again in turn accuses US of not allowing them to do trade with them fairly. So now when they have a tug of war between the two, most companies are opting to take their manufacturing into other places. So the coronavirus now catalyzes the move from China into other countries to make the companies that manufacture in China safer, because when everyone is manufacturing in China and China is affected, that's a big risk into companies. So another industry that has been affected is the tech industry. So companies like Apple, Microsoft have all warned that their revenues, they may not be able to hit their 2020 revenues because Asia is a big part of their customer base, and when their customers are not showing up to their shops, when they can't manufacture phones well, that's a big problem for the tech companies. So some of the tech companies have also been affected. Shipping is also another industry which has been affected. So from our research, there's a cruise ship that's actually stuck in Japan, somewhere in Japan, and they don't want to allow those people into the country because they believe those people may be contained, or they may be infected with coronavirus, and that's a big risk again of spreading the virus into the country. In Kenya also, if you look at Kenya as one of the samples, there are some of our citizens who are in Wuhan, but have not yet been shipped back to our country, because that is also a risk into there's a big risk in bringing back the people in the country, because it could hurt and result into spreading of the virus, especially if there is anyone who has been infected by the virus. So those are some of the key industries that have been affected in the economy. But if you look at the global economy, so the IMF, the International Monetary Fund, which is in charge of looking at the world economy, there's also the World Bank, which does that, and other research institutes which come up with economic projections. They look at what happened, what will happen, based on what already has happened. And if you look at the IMF, it has already signaled that they could cut their growth rates again by 0.2 for 2020. So looking at the global economy from a trader's perspective, the global economy is in the last stages of the market cycle. So there is something called the market cycle. If you take one of our courses, you learn about market cycles. In the market cycle, we have expansion and contractions. So we are getting closer to a contraction. And if you look at signs of a contraction, it is what is happening. So the stock market will most definitely go down. Central banks will struggle to ease so that they can bring back expansion. And risks are higher, so the risks of the market going down are higher. Markets are overvalued at this point. So these are some of the signs that the economic cycle is at the late stages. And when you do your research now, you can combine what I've told you about with your research on market cycles. You'll discover that we're in the last inning of the last cycle. And what that means is quite what many people don't expect to happen. So recessions will definitely come from a contraction. Recessions won't come from an expansion. Contraction, growth is slowing, and growth slows from different things. If you look at history, it could come from an overvaluation of asset. It could come from a pandemic like the one which is happening, the coronavirus. It could come from tightening of the Feds or tightening of the central banks it come from a peaking of inflation when it shouldn't peak, and they have to tighten. So these are some of the things that could hugely affect markets. So the stock market is our main area of specialization. So for us, we are currency traders, but for us to trade currencies, we need to understand the global economy and global assets. So we are macro traders. We try and understand what is happening across different assets and what that means for what we are trading. So in January of 2020, the number one asset that was hit hard by the coronavirus was oil. So the market was very quick to reprice the demand that was going to slow down. So we are going to have a decrease in demand because China is one of the biggest importers of oil. And when China is affected, when there is less manufacturing, when there is less travel, obviously oil has to go down. So we have seen oil lose almost 10%, being hit hard, moving all the way from 65 around from crude oil, from around 65 to trade at the $50 mark. A big hit, and we still expect it to keep on moving lower as the virus now spreads to other countries, as travel restrictions spread to other places. This means less demand of oil, and OPEC, which is supposed to cut productions, have not yet acted. So as long as OPEC has not acted, I'm bearish on oil. We're expecting oil to keep on moving lower. So other markets that have been affected, you can look at Dow Jones. Dow Jones on Friday closed low about 2%. Yesterday on Monday, lost about 3%. On the opening bell, about 900 points were shed off. So combining the total amount lost by the stock market in general, it comes to close $1 trillion has been lost over the last 3 or 4 days. All gains that were made in 2020 have been erased. So if you look at DAX was down 4%. When I'm shooting this video, we are almost 30 minutes into the opening bell of Europe. So it's around 10:30, 11. So the opening bell of Europe is around 11. We'll see what markets do today. Again, we can see S&P 500 losing almost 3%. So most markets have gone down almost 3%. Today, early in the morning, Asia session, Australian index was down 1.68%. Shanghai Composite was down 3% again. So what does that mean for the markets? Markets are repricing in the risks. So for a long time, markets never factored in the risks that were going on with coronavirus. So as oil was going down, actually the stock market was going up. And when the stock market is going up, it means markets have not yet priced in the risks that were coming from coronavirus. So many people thought it would be contained in China and we will have a V-shaped recovery, meaning that after it was contained, the economy will recover pretty fast. But now as the risks spread, as the virus spreads to other countries, it poses a big risk on whether we will, one, have a V-shaped recovery. If we don't get a V-shaped recovery, then prices are likely to be lower for a long time. And you can see now the stock market has started noticing that the economy may not recover as fast as we expect. So we're expecting some things to be done by policymakers. So Feds might be cutting rates. Again, there's a higher probability now of a rate cut in March. So odds are now higher that we'll get a rate cut. And if you're getting a rate cut, again, odds change. So your job as a trader is to look at what is happening, combine that with what you have researched, and come up with something that you think, come up with at least probabilities, not an accurate representation of what will happen, probability of the likely events to happen. So for us, we expect monetary policy makers to act, and when they act, we have different probabilities calibrated that will make us move our positions across different assets. So that's briefly what we wanted to talk about coronavirus. There's a lot of propaganda going on that the virus was started to erase people, that it is a thing done by the elite to destroy the poor, but for us this is propaganda. We like looking at facts, we like looking at what is happening on the ground. So that's it from us about the coronavirus. We've given you the hard facts that we have collected. We have shown you the relationship between the virus, the economy, and the markets. That was the most important thing we wanted to communicate. Now you can do your research, look at other pandemics, how they affected markets, combine the three again, and you can be able to deduce some lessons and understand how to trade in this volatile period. So that's it. Have fun, enjoy, and make money, make your pips as you trade.